All right, well, you will go ahead and get started. I am Christine Barth with the Covington Business Council, and we have been offering these webinars in partnership with HR Elements. And we're just doing these hoping that we can help out our members and our clients just learn how to get through these hard times right now. And today we have Mackey McNeill from Mackey Advisors. And I'll tell you a little bit about Mackey. However, on a side note, we have used Mackey for years and they are wonderful. So when we saw that they were offering these webinars, we right away jumped on board and wanted to somehow get involved with them because, like I said, for years we have used them and love Mackey. So Mackey McNeill is the CEO and president of Mackey, which is a Cincinnati-based firm offering family-owned businesses an invaluable and innovative combination of coaching and CFO-level financial expertise. Mackey is the author of several books, including the Gold, is it IPPY or IPPY? Award-winning and internationally published book, The Intersection of Joy and Money, which is a workbook for changing your relationship with money and the dynamics of money, in addition to the Prosperity Playbook. She's been quoted as a financial expert in major media, including the Wall Street Journal, the New York Times, Money, and USA Today. So without further ado, I'm going to turn it over to Mackey to give us our presentation.
Thank you, Christine. It's a delight to be with you here today. And thank you again to the Covington Business Council for sponsoring this webinar. It is our intention at Mackey to have as many people win through this economic downturn as possible, as I'm sure it is with the CBC as well. And it is a stressful time for many, and it is a time when many companies are booming. This is my fourth recession, and it's certainly a little different view on economic contraction, and we'll talk about that. So let's look at our agenda for just a minute. We're going to talk about the overall economic environment. How do you personally assess the risk inside your company? How do you stretch cash? How do you monitor your cash carefully? Because at the end of the day, most of what we're going to talk about is cash, but you could tell from the title, because that's what's going to keep you in business so you can thrive when the recession's over. How do you go about maybe finding some opportunities in this marketplace? How do you stay out of fear as a business leader? And how do you get more help? Because there's lots of opportunities out there. So let's talk a little bit about the current environment. We started into this economic slide from a global health crisis that, of course, began in China. And at first, it was a little inconvenience in the U.S. and just some supplier disruption. But as things progressed and the virus came here, we have business shutdowns. And so we have everything from clients who have no revenue because their doors are shuttered to clients who have more business than they've ever had before, and then a lot of things in between. But most people in this environment are somewhat challenged, either individually or as business owners. When we first started out, most economists thought we were going to have what they called a deep V recession. In other words, we were going to go dramatically down into a recession, and then we were going to come dramatically back out. As things have progressed, the general, you never know from which economist is right, but most of them are now predicting something that looks like a U. So we went down fast, obviously, that's what's happened, and we're going to stay down for a while. So that's why managing your cash flow through this time is so important. We've got to be able to survive through this period by having enough cash flow so that we'll be ready when the recovery comes, and we'll be prepared for the upturn, because we do think it'll come very quickly when it does get here. So which we'll all really look forward to at that time for sure. So again, our goal is for you to survive so that you can thrive when the recession is over. So let's look at how you get started. We use this tool, the Prosperity Ladder, in our business to think about where do you focus? And, a ladder, if you think about a ladder, you've got to focus, you've got to have the bottom part of the ladder the most stable in the beginning, and then you can move up. So we start with good data. You can't, if you're going to track the information in your business, of course, it has to be good data. It has to be relevant data that helps you focus and attend, because you don't want to spend all day looking at your data. You just want to see what's there, understand what's happening in your business financially, and move on. And as you move up the ladder, your first rung is cash flow. And for right now, the only critical number in your business is cash flow, because that's what's going to get you through this downturn. We can think about the other parts of the prosperity ladder. How much profit am I generating? What kind of lifestyle do I have as an owner? And maybe my legacy later. But right now, we're going to talk about cash flow and cash, and we're going to talk about two tools. One is a cash headroom tool that I suggest use in any environment. The second is a cash flow forecast. So we'll look at how do we put that together. But before you actually put the tools together, the first thing to do is to sit down and start assess where you are. So assess your own, whoops, a little too far there. Assess your own personal risk. And you're going to do that by looking upstream and downstream. So upstream are your customers. What's happening with your customers? Are your customers thriving? Are their doors shuttered? What's happening with customers? You know, if you're I was listening to a news report yesterday of a retail meat market. Of course, all the restaurants he sells to are out of business, but all his local customers are packing the doors. So he's actually up overall. So his commercial customers, I said, are completely out of business. So the risk is high and the revenue is zero. So what's happening with your individual customers? Look at each major customer or client relationship and make a risk assessment based on that industry and based on that customer of what is it likely to happen in your customer base relative to cash flow in the coming months. Then look downstream. Downstream are your suppliers. That's what's coming into your business so that you can operate it. So in many cases, we have supplier risk. I don't know about you, but we're living with ClickList and Amazon right now, and it's really hard to go on a website that the top of the website doesn't say deliveries are delayed today. So there's difficulty in getting goods to market everywhere. So what's your personal supplier risk? What's happening? What must you get so that you can do your work? And how is that going to impact your cash flow if it's inaccessible or becoming more difficult to access? So make those assessments. What's happening upstream with your customers, what's happening downstream with your suppliers, and begin to estimate on a risk assessment, how would that impact your cash flow? So then we want to think about how are we going to stretch cash. And you want to stretch cash just like you see the poppies in this field as far as you can see. That's what we want to see with our cash. We're going to talk about looking out for 16 weeks, that's almost 4 months, and seeing that we can have cash for the next 4 months. And hopefully by that time, some more cash will be coming in the door. That would be kind of in line with predictions, but we never know. But we're going to look at how to do that for 16 weeks. When you start thinking about stretching your cash, we tend to think about how we're going to cut expenses, but the first place I would suggest you look is actually on your balance sheet. Start with your balance sheet, and obviously you have cash on hand, but the second line probably on that balance sheet is accounts receivable. What's happening with your accounts receivable? Print an aged receivable and start looking at who owes you money, who's behind, who's on time, and how can you work with those customers to get that money in faster. If you're not particularly busy and you don't have really good cash flow policies, this is a great time, or receivable policies, this is a good time to hone those. Many companies are lax in collecting receivables, and let's face it, it's nobody's favorite task to call a customer who owes you money and say, hey, by the way, could you pay me? So think about how can you first collect what you already have. Get on the phone with people, anyone who's late. If they can't pay you in full, talk to them about paying you something. I would be remiss to say, ask them if they're getting some government assistance, and if so, when do they expect it to come so that they can pay you part of your accounts receivable, part or all of your accounts receivable out of that government assistance. So be on the phone with anyone who owes you money right away. And then begin to look at how do you do a better job? Do you really even need to collect money in arrears? In other words, can you collect advance deposits on some of your work? Sometimes it's, a recession is a good time to think out of the box. Can I get prepayments or deposits on my work? Is it necessary that I pay? Can I just bill earlier? I find that people who don't have really good billing policies often are billing 30 days after when they could have billed even under normal circumstances. And every day you don't bill, you increase your risk of not getting paid. And you the time you have the least risk is when the cash is actually in your account, in your door. So make sure you have really great policies and think through, are there other ways you can go about collecting your monies from your customers in all marketplaces and all times. The second place to look on your balance sheet is on your inventory. Inventory is basically stuck cash sitting in your warehouse. And you're going to need to look at that and see what is going on with my inventory. And is there something that I can liquidate? Is there something that I had bought 2 or 3 years worth of inventory because I thought I was getting a good discount on it, and now I can't turn it? Is there a marketplace that wants that inventory that isn't your normal marketplace, but you could negotiate a sale for it? So look and see what's happening with your inventory and how can you begin to turn your inventory faster. You know, I had a client one time that paid off a $400,000 line of credit in 90 days by getting very clear about their inventory and managing their inventory so much better and not buying things too far in advance and turning it much faster. So it can make a huge difference. Again, you want your cash in your pocket, not on your warehouse shelves. So the third place to look on your balance sheet is your accounts payable. Accounts payable, you're looking at just the opposite. How far can I stretch my vendors? If you have a major vendor, get on the phone and talk to them. They have a vested interest in keeping you in business, and just talk to them about what kind of terms can we work out. We've been on 30-day terms. Can we get on 60 or 90-day terms with you? Can we take the existing payable we have for maybe and term it out over the next 6 months or delay it for some time? But talk to any of the major suppliers and see what you can negotiate in terms of longer terms. The other thing to do is to think about how can you just pay people slower. You know, I have had clients over the years simply take all of their, if they've paid on 30 days, they decide to pay everybody on 45 days. And the people who complain, they put them back on 30. And the people who don't complain, they leave on 45. And then after a while, and they check all the 45-day folks, and they move them to 60. And if they don't complain, they leave them at 60. And if they do complain, they move them back to 45. I don't know that's a policy that I'd ever like to use, but I have seen it work for many companies over and over again. So if it was something that you might want to try, it's a tool that's out there. So think about how can you stretch your payables and negotiate longer terms with your existing customers, and just be honest with people that you don't have the cash to pay them. That includes your talking with your existing bankers about your existing debt. That includes talking with your landlord about your existing rent. If you haven't called them, they're expecting you to call them. So get on the phone and talk to them about how you can stretch or delay, maybe even suspend some payments for several months. All those are possibilities. We're going to talk also today a little bit about the government programs that are available, but focus on what you have right now first. Then after you've looked through your balance sheet, we've looked through about your accounts receivable, your inventory, your accounts payable, your notes payable, your leases. You've looked at all those things. Go to your income statement and look at your expenses. You know, things have been good. And when things are good, we get a little fat and we spend some money that maybe isn't a greatest return on investment. You know, anytime I'm choosing to spend money in my business, I'm doing it to create a return for that investment. And if you have something that you're investing in, if you're spending money for that you're not getting a return right now, it needs to go on the I'm not going to do that anymore list, and you need to cut that expense right away. So as you're looking at your expenses, I'd start by first converting everything in your income statement to a dollar. So if your revenue is $5 million, you're going to make revenue $1. If your marketing expenses say $1 million of the $5 million, your marketing expenses 20 cents. And you're going to do that for all your expenses. And then you're going to look at what's the major expense. People tend, when they're looking at expenses, to look at the small items. And you can make some progress there, but you're going to make lots of progress if you look at the big items. So if 50% of what you're spending, 50 cents on the dollar, is going to pay people, maybe you need to trim your people. Or maybe everybody's willing to take a little bit of a haircut. We've had clients do everything from lay off parts of their team, lay off all of their team, ask people to take a 10% across the board cut. So what works in your culture, and how can you work on reducing your cost overall? So what are you going to cut today? What can you cut today immediately? What will you cut if you have to? Make those two lists as you look through your income statement, starting with the largest expenses first and moving down. So that's in terms of your expenses, that's what I would suggest that you do. And some of those expenses, as you know, will be cut. You'll be able to cut right away. Some of them are going to be under contract and you won't, but look at everything. Now is a good time to really examine where you are and what's really important about your business. So as we look
Mackey,
at
we actually, because you're on that topic, I wanted to throw in a question that we just received
okay.
from someone, and it's about the monthly service contracts. She said, when we're closed, what about the monthly service contracts, elevator service, garbage pickup, et cetera? Are we still liable for those payments?
Well, we've had clients that was the first thing they cut. They said, we're not here. We're not creating any garbage. We're letting people know that we don't want garbage pickup and we're not going to pay it. I don't know that anybody that we've worked with has had any pushback on that, but I haven't followed up with them. So I would say, absolutely, I'd be on the phone and say, I appreciate that we have a contract, but I appreciate that you're not delivering on that contract now because we don't need you.
Thank you.
So, and that's the other thing is a lot of times people forget negotiating is uncomfortable, but it's what's required, and open, transparent conversations. I don't need garbage right now. I can't afford it. You want me to stay in business? I want to stay in business. Let's work something out. I think if you approach it from that way, you'll have some success. Does that make sense? A great question. Very good question. So I would talk to anyone that you have a monthly service to contract about and just see what can they work with you on. Again, your vendors want you to stay in business. So let's talk about what the government has made available. We did learn just before this webinar began that the PPP program, which is the most lucrative of the programs that were part of the CARES Act, the initial funding has run out. We would encourage you to still get your application in. It is a program that allows you, if you need money to retain your people, those funds allow you to use them for 8 weeks of payroll, and and some ancillary costs like rent, interest, some fringe benefits on your payroll. And it's a wonderful program after you get the loan, and then if you document properly and you do what's appropriate, you can get forgiveness, complete forgiveness for the monies that you spend in alignment with the objectives of the loan. So if you have applied and you've not gotten funded, or if you haven't applied, what I would suggest you do is apply and/or write your congressman and ask them to put some more funding in. As soon as they passed that law, I said, there's not nearly enough money. And I was surprised it really lasted as long as it did. So write your congressman, your senators, and your House people in the House and say, we need some more funds for the PPP program. The second place that you can look for money is in an EIDL loan. That is, you work with that direct with the SBA. So you go on the SBA site and you follow the directions for the Economic Injury Disaster Loan. We have had clients that are getting funded. There's 2 components to that. You apply for the loan, and then you apply for emergency loan, emergency advance. So you can get an advance up to $10,000, but it's not necessarily $10,000. And Robert and I were just talking this morning. I forgot to say when I started, Robert LaMothe and Adam Reynolds are with me from my office to answer all the hard questions today. Robert told me that we had a client that just got a $5,000 advance on their EIDL loan. So if you've not applied for the EIDL loan, I would encourage you to do that right away. And you do that directly on the SBA site. If you don't apply for the payroll protection program, you can also take a tax credit. And the tax credits are pretty lucrative, but and I'll give you an example of how they work. The tax credits are based on payroll. If your payroll for any quarter is less than 50% of what it was this time last year. So this credit is good through the end of this year. So for example, second quarter, if your doors are closed or you've had to lay a lot of people off and you have no revenue because you have no revenue, your revenue is probably 50% less than it was this time last year. You can get a tax credit for 50% of what you pay your employees, up to $10,000. So it's a $5,000 per person tax credit, and it's actually on your 941. So that's on your payroll report, and it's fully refundable. So it's a very different kind of credit than I've ever seen before, but available to you. And lastly, if you have an existing SBA loan, you can get a suspension for 6 months of the payments on that loan, really just by contacting the SBA. So good to know. And we didn't, I usually don't mention this, but if you are having challenges as a business owner, you're probably having challenges personally too. All the things we talked about in terms of negotiating and working with different people, you can use on your personal finance side as well. So anything that you have personally, is coming from the business. So it's all kind of one big bucket at the end of the day, isn't it? So let's talk about, well, now we've sorry, my mouse is a little bit challenging this morning. Now we've talked about where we're going. Let's talk about how do we get our data facts together in terms of cash. We're going to start with a 16-week cash flow. And this is going to take you a little while to put together. We're going to help you out by sending you a spreadsheet that's pre-populated with all of the formulas. So all you have to do is insert your data. And as you can see, there's weeks across the top. So it goes week by week, and we're going to ask you to look out 16 weeks. And then you're going to start with, very simply, what's your beginning cash? Then you're going to look at what you have to pay, what are the payables that you have to pay? What's the payroll that you have to meet, and what operating expenses do you have to pay? So for each week, you'll look and see what outflows and inflows are happening in my business. And then you'll begin to put in your cost savings. I suggest you do those separately, because as things change or you find maybe some new marketplaces, or we sort of reopen, you might be able to look at some of your cuts and say, I really didn't want to cut this expense, but I'm going to put it back in. But it will give you a quick way to look and see, what did I cut? So if I want to add something back in, I can. And then the spreadsheet ends with adding back your available cash on your line of credit, and then ending cash. So the number at the bottom, that green line that goes across the bottom of your screen, is your ending cash. And you want to look out for 16 weeks and see a positive number. If you don't, the number one job for you as a business owner is to figure out how to make that a positive number. As I said, there's only one critical number in your business right now, and it is cash flow. Once you can't really move forward until you solve the cash flow dilemma, because it means you're going to be preparing for bankruptcy. So get with your creditors, and get with your all the people that you have agreements with, and work it out so that you can make it through this 16 weeks. Again, you're going to get the spreadsheet so you can populate with your own data. I would encourage you not to be discouraged. It is a little hard to fill it out the first time. Once you do it, though, it's not so hard to update. And so when you've got this put together, I'm going to suggest that you update it every week. So if you're going to do it on Monday, do it every Monday morning. If you're going to do it on Wednesday, every Wednesday morning, whatever is true, whatever works for you, do it at the same time every week. Update your cash forecast. Once you know everything's okay, then you can go about your business doing something else. That's what the purpose of good data is about, to get you focused for when you need to be focused, and then move on. So this tool I've used over and over for clients who are challenged, not just in recessions, but people who get themselves stretched, and when they didn't really realize they were going to overstretch themselves, and they've used this tool very effectively to get through hard times. So do not discount the fact that it's a simple spreadsheet, that it'll make a difference for you. The second tool I'm going to suggest you use, I would suggest you use in all times, good, bad, and everything in between. This is called a cash headroom report. And cash headroom we define as the available cash that you have right now, what's coming in receivables the next 30 days, you add that in, you subtract out what you have to pay in the next 30 days, and you add back in your available line of credit. And that gives you this, what you see on the screen is the blue line. That's your actual cash headroom. This is a tool that you do every week. So again, you report your cash headroom every week. And I get this report emailed to me every Monday morning based on Friday close. So I can see my cash headroom. The other two data points on this graph are the red line. Obviously, red in accounting is not good. The red line is a warning line. So usually that's 45 days of cash. If we look at a business, we're always looking at saying, if you only have 45 days of cash, that's a little too little. That you need to have more than that. And the green line is about 90 days of cash. I've said many times since this started, I'm beginning to rethink that 90 days of cash is enough, but that's what we've always used in the past. But some of you probably be happy to have 90 days of cash. Cash, and if you're having cash problems, I also say you're in very good company. Most small businesses have cash challenges. So again, it's not going to be unusual that when you call people and tell them you need some help, they're expecting your call. So going back to your cash headroom, you've got your actual cash headroom is the blue line, your warning line, and your green line. So I look at this report every Monday morning. As long as I'm over my targeted cash headroom, my green line, I just go about the rest of my business and focus on growing my business. If I'm beginning to get down into my reserves, I know I need to spend some time thinking about what's happening in my business. If I slowed down my receivable collections, if I'm spending more money than I expected, what's happening that I didn't expect? And I can attend to that and then again, go on with running the rest of my business. But this is an amazing tool. Use it forever. It's very simple and it will give you a lot of peace of mind. Even when you don't stutter, it'll give you peace of mind. So let's close up today by talking about opportunities and staying out of fear. There are opportunities in every market. Economic seasons are just like the seasons in winter and summer. They come and go. And a good recession, never let a good recession go to waste. It's an opportunity for us to really understand what's important and how can we be more creative, more innovative, and more efficient. This is a time to really dig in and say, how can I make my business better so that when we come out of this recession, I will be ahead of my competition. So get together with your team and plan and ideate and innovate. Put new marketing plans together. Think about new promotions. Think about new strategic plans, new marketplaces. Have you always been wanting to do, but you haven't had the time for? Do it now. So test new software. There's so much new software out there. Is there software that would let you be more efficient, more aware, and more lean in your business? Try it out. Now's a good time to test it. Learn new things. And as a business owner, the other thing that I think is very important is that you self-manage and you stay out of fear. Your customers are watching, your suppliers are watching, and your team is watching. So stay positive and stay grounded. What is it that's true helps you stay grounded? And first of all, for me, it's good data. Knowing that I have enough cash flow that I'm going to be able to pay my people puts me in a good space. But also, I do yoga and meditate. Other people, that's like staying connected with your friends. What's true for you? How do you stay centered and grounded so you can stay out of fear and stay into possibility? When we're in fear, we're generally not making our best decisions as leaders, and that's not where you want to be. So focus on what you can control, let go of what you can't control, and that's a recipe for success and peace in any environment. So we'll wrap up by taking questions and reminding you that we've got some free resources coming. You've got the Cash Headroom spreadsheet coming to you. It's, again, fill in the blanks. All those formulas are there. Put your data in. The Cash Headroom tools are coming. Our ongoing blog posts, we're blogging almost every day at MackeyAdvisors.com, and the CBC has some great information out there too. Look at their website and see what tools there are. The other events that they have are posted there as well. We have an event called the 4 Ways to Grow Your Business. It's an opportunity on May 19th to join us and look at how am I going to grow my business when this recession is over. It's a great time to do that. And we will repeat this webinar next week. So if you need help understanding how to get through the PPP loans or the EIDL loans or understanding about the CARES Act, we do offer a free 15-minute consultation for anyone who asks. You just email Robert at our office, Robert at Mackey Advisors, or call him at the number listed on your screen. And I'll say thank you, and I'll turn it back over to Christine so she can tell us what the questions are.
Great. Thank you so much, Mackey. And again, if anybody else has any questions, feel free to insert them in the chat. We did get a few ahead of time. One is there any rumors for a second round of funding for PPE, the PPE? Do you have any updates on this, or is there anything true to that?
Robert, do you want to talk about that a little bit?
There's been quite a few discussions around the numbers that's been thrown around is 250 billion to add to that. I think the challenges is that Congress is not in session, so that work would have to be done sort of remotely. And then there were kind of already challenges on the front end about what it was going to take to get that through. So there are discussions. So the thought on that is, that might be towards the end of April before, we might see some of that replenished.
Okay, thank you. Mm-hmm. And then is it true that they are limiting the economic injury land funds and the 10,000 grant?
So yeah, so that is false. So the economic injury loan or disaster loan, there's just some more clarity put around the advanced portion of that. They use the guidance to tie that to employees. So essentially the advance is 1,000 per employee up to 10. So if you had 10 employees, you'd get the full 10,000. And so we're actually encouraged some of those, although it's not optimal. It's been slow to roll out. Clients in Kentucky and Ohio are starting to see their advanced dollars, that prorated portion of the advanced dollars come out. So.
And the last one that I thought was interesting and a good question is, what is the #1 leadership skill that business owners should demonstrate during this time? You kind of touched on this, but can you touch on it again, Mackey?
Well, I certainly think positivity and staying positive, but also being honest and transparent. If you're negotiating with anyone, they expect your honesty. So tell the truth about with your team, with your suppliers, with your customers. What is in terms of cash flow? If you're challenged, don't be dishonest about it. But stay positive. And I think if you actually do the hard work of that we talked about in terms of your looking at your balance sheet, how can you collect cash? How can you reduce your expenses? What are the opportunities I have for the idle money and so forth? You can come up with a plan to keep yourself in business and keep that cash flow positive. If you need some help once you get those tools, we'll be happy to supply that as well. So again, once you start digging in, it can be, I think what I would say is, when I was a kid, I was afraid to open my closet door because I thought there were monsters in it. But the truth is there were no monsters in the closet door. So when we don't dig into our data and we don't want to look, sometimes we're making up monsters in the door and the closet. So the looking and knowing what your data is super important, and sharing that as appropriate.
And that's great for all the time. It's unfortunate that now's the time that we use that sort of advice. We should be doing that year round. So, well, if anybody else has anything, please feel free to ask. I'm going to go ahead and close us out. You will be receiving those not flyers, the information that she discussed. We will email those to you. And if you have any other questions, please feel free to reach out to myself or one of the folks from Mackey Advisors. We wanted to thank you very much for your time, Mackey, Robert, and Adam. I think this is great information. I sat in on this same webinar last week, and I thought it would be something nice for us to share with our members. So hopefully you guys got some good information out of it. Please watch the CBC newsletter. We do have several webinars coming up and several more that we are scheduling. So just keep your eye out for those and on Facebook as well. And again, I'd like to thank Mackey and HR Elements for your partnership, and everybody have a great day. Thanks.
Yeah, thank you.
Bye-bye.
Bye-bye.